So traders, the stock market right now is getting very frothy, and I believe we're getting ready for a move on the downside real soon. And I actually see this drop that's likely to come real soon. A good, say, 5 to 10% correction. But on the other hand of all of this, on the other side of this, I see a nice good move up, especially like I have a target on the S&P 500 of 7,500 by the end of this year. Now that may or may not get there. If you click on my name on this video, there's on my YouTube channel, you click on my name, my main trailer video that it's my main trailer video. You'll be able to see that video that I did, which was at the start of the year. That simply means the S&P 500 chart you're seeing right now. At the start of the year, I did a video and I did a video down here saying that I believe we're going to get to the 7,500 target this year. Now that just came from looking at Fibonacci extensions and long-term charts and monthly charts and stuff like that. So that's what I was looking at there when it comes to the big pictures there. Now, the one thing that I do say is when looking at this, when looking at the charts right now, we're starting to get very frothy. And the one thing that is really, really, really important to understand, and my TC2000 is loading up on me. How good is that? So, by the way, guys, I use two different types of charting platforms for myself. One is TradingView. I normally use that for the futures and stuff like that. And then I normally use also TC2000 when it comes to the stock market and all that sort of stuff as well too. So I really like TC2000 because that's the scans that I run for my trading system. If you'd like to learn my trading system, guys, I'm running a webinar today, that first thing in the description. And on that webinar, I'll actually walk you through my trading system. I'll teach you step by step exactly. I'll teach you all the rules, and I'll show you both examples for bullish side and also for the bearish side. And I'll teach you step by step so you can actually start to look for the pattern. And the way that I trade, guys, is this moving average here is a 52 moving average. That's all I use on the chart and the chart pattern. So if you're interested in learning that, guys, then again, that first thing in the description, go join my webinar today, and I promise you, I'll walk you through my actual trading system that I actually look for every single day, and stuff like that. Now, if you are struggling and you're not doing well this year, maybe your first 5 years, then on that webinar, I walk you through three secrets. The first secret is about exactly what I had to do to actually get out of that funk of actually just not getting ahead. So I guarantee you're going to love that. Though, looking at the markets here, we can see where we are right now. Okay, so one of the really important things I really want to encourage you to do is when looking at these markets and going down the path of getting worried about the movements of these markets, I really want you to look at this here. Okay, so firstly, we do know that eventually we do end up getting these, even let's see this point through here, right? See how we actually got a little correction point through here. So we end up getting that correction point there, right? Correction there. And we end up getting these corrections along the way. So we can see we're very, very, very long in the tooth. We may actually have one more little push to the upside to get just one more little push. But then we know very, very soon, over the next couple of months, we would have experienced a nice big correction. There. So the one thing that I do say, though, is when looking at the stock market here, when looking at any market here, one thing you want to always be doing is keep an eye on the really big long-term pictures, okay? Because one thing that you want to ask yourself is that is this a correction or is this a change in trend? Because a correction, or known as a pullback, right? What is that? If you think about this in the context, and this is where stepping back and look at it from the context of what exactly is going on right now, and what you don't want to do is you don't want to see red bars like this, and then that's what you see, but that's all you're focusing on is this down movement here. What you want to be doing is you want to step back and you want to look at the real big long-term picture, and the big picture is okay, then is this a complete change of trend, or is this just a nice, normal, healthy correction, pullback in the markets? And so we consider through, because we may be coming down through here, but what you don't know it was just a normal part of the correction there. And this is something that I'm always talking about with my 1% group. And I'm always with them every single day for a couple of hours. If you are looking for a group, guys, or you want some really good sort of hand-holding coaching every single day for a few hours, then you may be a good fit for my 1% group. That's the second link in the description there, or go to getjohnshelp.com. And you'll be able to apply to join me. And if you really want to get your trading sorted, guys, I promise you I can do this. Though looking at what I was saying before was about the big picture. This is the real big long-term picture. And so this is what I like to do. So for example, if I look at the Dow Jones, here, and I'm looking at a big monthly charts here, one thing you'll notice here is see how me looking at this very big long-term picture. Firstly, we're only halfway through this big long-term bull market. Now, I want to preface of what I just said there. Yes, I believe there's a freak out correction coming. And I say freak out because most traders who are not seeing what you're seeing right now in front of you, they're going to freak out, right? They're going to go, oh my goodness, I didn't expect this. Well, you're going to expect it, right? Because corrections are just the normal. Now, again, is it a correction or is it a complete change of trend? Now, if you look at this is a big long-term monthly charts here, right? 12 years in, you can see how this big long-term monthly charts keeps you in order. Unfortunately, if we're focusing too much on, let me bring on a daily chart here. Unfortunately, if we're focused too much on just the last 3 months, 6 months, even 12 months, we're missing the big picture here. And so we're seeing, and all you see this big drop here. That's what people focus on, right? Oh, the big drop, the market dropped 10%. But do you notice something here, right? Notice something here. And this is even for traders, right? This is one thing, even for you guys that are traders and investors, right? All around the world. I want you to be thinking about this here to neutralize your journey around these markets. And this is something that helps me stay calm and make good decisions in these markets again and again and again. Now, I'm not perfect, right? I say again and again and again. I get a large percent of the time I can make good decisions because I'm not looking at the market from a perspective of fear and greed and emotions and money. I'm looking at the market as a perspective of what is going on right now. Yes, we may be going down right now. Now, I'm not saying we are on this particular chart, but what is this? Is this just a normal part of the bull market? So if I want to see that are we likely to be majorly topping out right now, and are we getting ready for a complete 80% correction here right now? Well, if I bring up this chart here, this is the Dow Jones once again, but what I've done is I've done two things here. Firstly, I've got over 100 years of this Dow Jones chart, and you can see we're in cycles here. So to me, yes, we're going to experience those nice, good, maybe a good 10% correction now. I'm expecting maybe even a 20+% correction, maybe a 30% correction next year. But even with all these scare moments in the markets, right? The correction that's likely to come right now, even within all of those moments, look at this here, right? So notice how, if you look at a chart like this, a monthly chart, black bars here, and now we're moving to the upside. So we can see now that you can see that every single time all this was, all this was what? All this was just a nice good drop in the markets, 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 all known as a correction or known as the pullback. It wasn't a complete change of trend, was it? And how you know that is what? Because it'll go up through here, right? So let me see if I can, let me get a different color for you guys, and let's go this one here, right? Oh, are you? Let's go. All right, blue. Okay, so you can see we went up, higher, low, higher, low. See this here? So yeah, we can see this right now, but notice every time we've had these short-term freakouts, right? Now the freakouts could be like what we had this year, right? Tariff freakout. The freakout could be like what we're coming over the next couple of months, which is a nice, good, say 10% correction. 10%, 10% correction, and guess what's going to happen? I call it a freak out correction. Freak out, because people freak out, right? But the thing is, as you can see, is every single time we've had these freak out patterns, they've actually been amazing buying opportunities. And then we go back a new high, and then we go back a new high, and then we go back a new high. So even though I'm expecting a nice, good correction out of the markets, yes, I'm expecting that. But if we can step back and look at the market from a big picture perspective, we can actually see, there's actually nothing to be worried about. Now, why is this important to you? Whether you're an investor or a trader, why is this important to you to do this? So you can try to keep your emotions in control and not let the emotions, fear, greed, doubt, oh my goodness, that emotion, and then also your thoughts about your trading account going up and down or your investing account going up and down. And then on top of all that, you start to tap into noise. Noise is what the media is going to do. Now, just remember, media is here to present what is happening right now, not what's going to come in the next month or the next 6 months, right? They can give their opinion about what's happening right now, and that's what they do. There is a lot of noise around these movements, especially when the markets go down, right? Markets go down 5%, 10%, 20%, like what happened in the tariff, and guess what happens? People freak out. That's what I call it. A freak out correction is coming. So people freak out, don't they? They freak out. And so the reason why they freak out is for those two main reasons I said there. Firstly, they're going straight off their emotions. Fear, greed, doubt. Oh my goodness, this is the top. It's going to completely crash. Right? They're focusing on that. Now, why are they focusing on that? Firstly, they're focusing on that because all they're looking at is a chart that looks like this here. And all they can see is this market completely just falling off a cliff. Because they're focusing on what? The last, say, 12 months. They're not looking at it from a big picture perspective of the last, 50 years. And saying, okay, what's really going on? Because if you look at the last 50 years, that there was the tariff. See that there? That point right there. This one right here. That there was the tariff. And when you look at the screen here, it doesn't do anything to you, right? Like, oh, okay. Is that what I was worried about? Damn. Do you see what I'm saying here, right? So, this is the logarithmic chart. It's on the Dow Jones. Bring it back to the big picture. And that's what you want to be doing on every single market out there. Now, I'm using the Dow Jones here as an example. But the first thing there is to sort of make sure that you are not getting so emotionally tied to all these little ups and downs in the markets. Because guess what? Market go up, market go down. Market go up, market go down. Now, depending on how that market go up, market go down, we can start to see what's going on. Now, if the footprint is always the trend is your friend until the end, which means if the big boys are saying, who control these markets anyway, not our emotions, our fears and doubts and so on and so forth, and not the noise, right? The noise is what the media is going to say and the YouTubers are going to say, right? Because guess what? YouTubers know, guys, I'm a YouTuber. You're watching me on YouTube right now, right? Guess what? When the market crashes, guess what us YouTubers do? We get your attention by doing a thumbnail saying it's all over, that's it, it's going to be completely bad. Right? Why? Because fear sells. Fear sells. Right? And fear and that's what you'll see with a lot of channels there. It's like, this is so bad, this is so bad, this is so bad, oh my goodness, this is so bad, oh my goodness. And all you hear for probably over 10 plus years is what? The market's going to crash. That's it. It's all over. It's going to burst. That's it. The debt bubble. And the market just keeps moving forward. So yes, eventually all that sort of stuff is going to come true. But is that going to be 10 years from now? 5 years from now? Who knows, right? But what we can do is we can stop thinking about and trying to have an opinion on when that's going to happen, right? And we can insert all these things in our minds. Or we can just simply look at the market and say, you know what, market? You tell me. Right? Because the market will start to give us clues about what's going on in the markets here. And the market will start to give us clues about, okay, are we now starting to majorly top out? A? Or are we just going through a nice healthy correction, nice healthy pullback? Because as you know, and as you can see, even on this monthly charts and every single chart out there, if you think about how a trend is formed, we know the trend is your friend until the end, right? We do know that. Unfortunately, people do know that and they still try to short a big bull market. Go figure. So here's the thing that I want to say to you. Okay. Now, by the way, I say go figure because traders, you do realize if you're trying to capture big profits are made when you go with the market, with the trend, right? So that's the reason why a lot of traders who trade against the trend, heads and shoulders, double tops, divergences, stochastics, and all that sort of stuff, they're generally against the overall momentum of the markets. So you generally pick up these smaller profits and big losses. That's where with my trading, again, you can join me on my webinar today and I'll show you all the details. That when my trading really flipped on the positive side for me to really help me go on the more positive side is that I started looking for moves that I could actually then get in and go with the overall trend, with that next leg, hopefully capture a really good move over the course of a month or two, have a really big profit. And so therefore, if I do have a loss, if I can keep my losses small, now I'm actually doing that through there. Makes sense? And to me, that's the only way to really win at this game is swing trading. You have the whole day trading and swing trading. Day trading is actually hard. Meaning getting in and get out every single day. That's quite difficult, right? One thing that I've found to myself to be much more less stressful and much more high probability and much more high profitable is called swing trading, right? So if you look at my last few trades, so for example, Ethereum. I'll bring up Ethereum as an example here, right? Let me bring on this here. Ethereum was a swing trade for me. What that simply means is that I got into Ethereum here, I rode it up for about a few weeks, and then I end up getting out here. Makes sense? And by doing that, the way that I trade myself is I only trade half an hour a day, an hour per day, because I have scans that help me find these trades for me and so on and so forth as well too. Plus I know what I'm looking for, right? So that's the way I'm just diverting off the main topic about the trend analysis and so on and so forth. But I want to share with you that if you are trading the markets on a day trading basis, just make sure you're finding the trend. Now the trend is also when it comes to highs and lows. Now I want to go back to trend analysis, because if the trend is your friend until the end, how is a trend formed? All right, and so if we go to say this chart here on the Dow Jones, right? How is a trend formed? So whether you're a short-term trader, right, you're getting in and getting out with a couple of days or even for a week, or whether you're more like a long-term macro investor, this chart here is one of the most important charts to look at. Why? Because it tells you what's really going on. And what that simply means is this, is that are we right now, and whatever's happening here, okay, when we're going up, when we're going down in the markets, what is going on right now? And so if we are going down in the markets through here, then we don't want to focus on just that one down leg. Yes, the market's going down for the last 2 months, and I'm not saying it's going that long. An example of tariff, right? Yes, the market's falling off a cliff. Yes, the market's going down rapidly. And of course, all that sort of stuff's going to happen. Guess what's going to happen to the YouTubers? Me, right? Here we go, right? Get your attention. What's going to happen to the media? Get your attention, right? That's called noise. What is signal? Signal to me is, how do I remove my emotions so I can see the truth of this thing? Because as you can see, the last 10 years, by looking at this here, guess what? Every time. This here was when Trump became elected the first time. COVID, the recession fears and tariff there. See it through there? So we go through this process here and we go through understanding here what's going on, and we can just remove the signal from the noise. And a lot of this, most of the stuff out there is just noise, right? And the only signal you can look at is like, yeah, we're going down here, and call this a 15% correction here, right? But what if you saw a chart and the chart looked like that? I'm trying to get, right? Low, high, low. All this here is what? Just a nice, healthy correction, because that's what a trend is, right? The trend is your friend until the end. Yes. But if that is true, then how is a trend formed? A trend is formed by higher lows. Yes, but how is a higher low formed? A higher low is formed by the market going up for a while and then having a drop, and then it creates a higher low, and then we go up again, and then we come back down, and then we come back down, and then we create another higher low, and then away we go again. See it through there? So if we know all these adages, right, the trend is your friend until the end and all that sort of stuff, then we want to keep stepping back and seeing this market here. That's why when you look at these charts here, this is the Dow Jones. If you go look at the S&P 500 right now, that's why on the S&P 500, when we were down here, and again, you'll be able to see, this is a monthly chart here, by the way, monthly charts. you'll be able to, once again, if you click on my name after this video, you'll be able to see my trailer video. Down the bottom here is when I started saying we're probably likely to get to 7,500 up here. What's that? Up through there, 7,500. And that's when I did the video. One of the things that gave me confidence to actually make that call was simply just looking at this chart here. I'm like, what are people worried about? Now, as you can see, right, a lot of people miss out on so many amazing opportunities because they're focusing on the fear. And the fear comes from focusing on what's happening in the last 2 months, not the big picture. Right? And then also, secondly, then they're focusing on noise. Noise is the everything that's it, the top's in, the big crash is going to start, you know, that sort of thing now. Just remember, guys, right? Just remember that the chart, and this is where macroeconomics don't tell you when the market's going to top out. Yes, we can have weakening data. Yes, things can look bad. Yes, they can raise interest rates. Yes. You know, we can have bad GDP numbers. Yes. But if the market is not responding to that in that way, then guess what? We're probably likely to continue. And the way that I see this here is, as you can see, if I bring up the Dow Jones, if the Dow Jones and the whole stock market is going to start to create a major topping pattern, and we're going to go through, you know, a 2008 style 50% crash in the markets, that may happen, right? That may happen. But as you can see, every single time we've gotten a higher low here, every time the market's got a pullback, we've continued on the upside here, right? So we can see that through there. And as you can see by this big long-term charts, notice this is a 52 moving average on a monthly chart on here. And the charts here, you can see from the scaling, I've got it on a logarithmic. What do you notice about this moving average? Whenever the moving average is strong trending in a direction, by the way, FYI, when you are trading, even on a daily chart or even trading a 2-minute chart, put on a 52 moving average. And if the 52 moving average is strong trending in any direction, go with that. That's called strong momentum. Bit of a tip for you guys. All right. Again, on my webinar, guys, you'll be able to see how because that is rule number 2 in my 4 rules that I look for a high quality setup. And you can see what I just did there. So, and because as you can see, right, look at the best moves were long through here, moving average going up through here, long through there. What's still happening now? But notice this here. Notice when the moving average starts to flatten out here, that's when we start to go through one of these decade-long sideways periods here. Yeah, it's an overall sideways period. What you don't, most people wouldn't have seen the 2008 just being the sideways period, right? Most people were looking at 2008 saying, oh my goodness, it is over. That is it. It's just... Now, I wasn't looking at this in 2008, but what I'm looking at right now is to say, okay, there is actually nothing's changing here, right? Nothing is actually changing from the perspective of looking at these markets and saying, okay, even if we do get a little short-term correction here, which we're likely to get to, right? We know there's a correction that's going to come around the corner. Is it going to be now? Is it going to be next month? Whatever. It's coming. 10%, here we go. But do you know that 10% is what? Just that there on the Dow Jones. If we got a little 10% drop on the S&P right now, let me zoom right in. Let's just say that the S&P dropped 10%. Right there. That's a 10% drop. Is that, oh my goodness? Let's just say it's a little bit more. Came down a little bit more from there to there. That's 12% drop. Is that, oh my goodness, the top's in, that's it, it's all over? Or is that a buying opportunity? Right? You see what I'm saying here, right? And so this is one of the things that, I'm always talking about, and I'm always, even with my own personal trading, I do this from a big, large perspective on the stock market to see, okay, are we really getting ready for a big recession here? Now, I want to reframe that. We may go through a recession, right? And the thing is that we may go through a recession, which I'm actually expecting possibly next year. I say possibly because no one knows that. No one really knows, right? But if we do go through that, I'm actually expecting, this is actually what I'm expecting here. I'm actually expecting a little drop here in the next couple of months. a big rally towards into next year, right? Then a real big 20, maybe 30% drop down to here somewhere, and then another big rally. Right, but the next 5 years is going to be absolute tremendous, guys. Absolute tremendous. And that's where you never want to be sort of shaken out, freaking out, freaking out, right? You want to be shaken out about these short-term movements. So a few things here. So no matter what I'm doing here, if I'm trying to look at any market here, one of the things I really want to encourage you to do is do two things. Firstly, bring up a bigger chart, a longer term chart. If you're trading, say for example, if you're trading, say a 5-minute chart or so on, stuff like that, bring up an hourly chart of a stock. Now, I want you to bring up an hourly chart, but I want you to remove all the indicators. Don't look at stochastics and MACDs and RSIs and all sorts of stuff because it's confusing the hell out of you. What have I done here this entire video for you? What's the main thing I've talked about here? Just trend analysis, right? But understanding how trend is formed. Why? Because as you can see, just by understanding this one thing here, the trend is your friend until the end. But also, if you understand that, you can see, okay, what's happening here. But how a trend is formed is it'll go up for a little while, 1 month, sometimes 2 months, a big move, and then it'll come back down for a couple of weeks, maybe a month, right? And then we have another big move for a few weeks, and then we maybe go sideways for a month, and then we keep going through that, right? We know this is how markets swing. That's what a trend is. And so we're not freaked out by that. In fact, if we have been going up for a while in the bull market and it's been going straight up like we have been in the S&P and the Dow Jones, we do know that it's just due for some sort of healthy correction. In fact, that's what you want to see. You don't want to see this thing just continue going up and up and up and up, because that's getting into bubble territory. And when that happens, yes, then you start to see some real big severe corrections against the markets. And it's all over red rover for most people, right? The freak out correction. So we can see that through there when it comes to the S&P 500 from what we're seeing through there. So that's what I'm overall, guys. That's what I'm seeing. What I'm showing you there. Now, again, if I go back to this chart, if I go back to this blank chart here, this is a blank chart on the S&P on the daily chart. Now, again, for me, I don't want to be focusing so much on now. The reason, by the way, FYI. The reason why a lot of the times I use black bars, because I'm trying to do whatever I can to remove the emotions from my trading. Because the more that I can remove my emotions from my trading, the better the decision I'm going to be, the better decision I'm going to do. Because if I'm in the long position and I see a big red candle like we saw on silver today, right? Silver big drop. Oh my goodness, silver big drop. You start to get the emotions in that there, like, oh my goodness, and then the fear kicks in, and then there's an emotional reaction, and then there's bad decisions. All that there. The way that I like to counteract that to help me make good decisions is the first thing I like to look for is black bars. If I have black bars here, I'm not seeing red and green, right? I'm not saying, oh my goodness, I'm just seeing the market here. The next thing I want you to do is I want you to squeeze your charts up for at least a few years to see what's going on. So if I look at this, if I actually see this here, let's just say, for example, we actually do see this here, right? And this market does push up a little bit higher, which it may do. And then we go through that nice, that there, roughly around that level there, is a nice 10 to 12% correction. If we do get this in the next couple of months, is it all over? Is the top in? Well, no one definitely knows, right? But what is happening here? Low, higher high. This is probably just going to be a higher low, and away we go, right? We see that through there all the time from there, right? If we go to, let me actually I'll bring up an actual chart here. So let's go look at silver right now, right? Silver right now has had a pretty big drop to the downside. People freaking out. Now, yes, I'm using candlesticks here because I'm using the trading view, all right? Just bear with me here. So if people focus on silver right now, what are people focusing on? Oh my goodness, John, look what's going on. Big red down candle, silver, big red down candle. Oh my goodness, it's all over. Now, by the way, FYI, it may be over, right? But just remember, this is what silver do, right? Silver do this. So we can see that silver's had a big down day today. Now, remember what I said before, the trend is your friend until the end, okay? Now, if you want to see what's going on here, right, squeeze your charts up and see where the highs and lows, not the individual candles. This down candle doesn't mean anything to me. What most important thing to me is low, higher low, and another higher low. What is this? This down here is what? Just a down bar? Just another one of these bars, another one of these bars, another one of these bars, right? So right now, yes, the silver is selling off right now, down almost 2%, right? Oh my goodness, right? And then you start to go down to what? The lower time frames, such as the hourly and the 4-hour chart. And what's happening here? We had a very strong move to the upside, and now we're getting a drop to the downside. So what does that tell you? There's a massive probability that if we're seeing this from a low to high perspective now, that we're possibly getting ready for, that's the 38 there. Let me see if I can change that to one that there and change that there. Here we go, right? So there's actually a good probability now. We're probably going to come back down to here. But all this is doing is what? If people are freaking out by silver drop, oh my goodness, so bad. No, hang on, stop, okay? No, not so bad, not so bad, okay? Now, I understand if you are short-term trading the markets, and especially if you're doing like one-day options or weekly options on SLV or GLD or, doing that type of strategy, yeah, I can understand the reason why you're freaking out. That's why you're probably losing a lot of money. Don't ever do that, guys. When I do my options trading, I know I'm probably going to be in the trade for at least a few months. So I'm buying 3-4 months, sometimes 6 months in time, buying that much in time. Weekly options, guys, if you're buying weekly options or doing weekly option strategies, spreads and all that sort of stuff, my goodness, that is very difficult, guys, long term to do really well, right? To do really, really, really well. But looking at this silver here, what's silver doing right now? Yes, silver is actually having a bit of a drop through here. Is it, oh my goodness, the top's in, that's it? Now, it may turn into that, but we can't go on what may happen. Because as you know, as you know, is that what? Most of the time, the things we're fearful of doesn't actually even happen in the markets. It's like, and as you can see from that big long-term chart, right? This long-term chart here on the Dow Jones. This one right here, right? Every time we've had a big drop, just like this year here, just like this year, right? People are freaking out. By the way, when there's so much fear in the marketplace, right? Most people do make the wrong decisions because they're going based off that moment of fear. That's the best time to buy, right? Hence the reason why I did the video about the 7,500 target here, right? So let's go look at this here. So this is the silver market here. So if I'm looking at the 4-hour chart now, and I'm saying, if I'm looking at this silver chart now, is this a complete change of trend and it's going to be all over? Now again, it may turn into that. Or what's more of a probability? More of a probability is what? Let me just take you off the screen because we don't need you anymore. A more of a probability is that we had just had a very strong move to the upside, and now we're just getting a little bit of a pullback. Guess what? The pullback is you're actually waiting for some sort of a pullback, right? Because why? How is that trend formed? How is a trend formed? Oh, that's right. Market go up for a little bit, and then we go down. So since we've been going down through here, what's this probably going to be? It may go down a little bit more to here, find some support around the 50-60%, and then start to make its way back up. So to me right now, just by using trend analysis and not individual candlesticks, I'm not focusing on, and this is where like a lot of traders will be right now, a lot of traders will be focusing on, oh my goodness, look how big, you see look at this here. Of course that's going to create so much emotion in you. It's creating emotion in me right now, looking at, oh my goodness, right? No, right? Zoom your charts out. But, and I'm talking about like lots of out, right? And I say lots of out, like even looking at this 4-hour chart, see what I'm doing over here? Squeeze your charts up here so that all the bars are really small. Who cares about I don't care about the individual candlesticks. I care about the actual trend analysis. Because if the market's going down, but this is likely to be just part of the trend, well then I better not make any bad decisions. Like we're seeing with silver right now, right? So silver's actually doing that. And again, silver right now, not only from a 4-hour perspective, but from a weekly charts, look at that there, right? Look at this weekly chart. Is this, if we get a drop here, right, has anything really changed out of silver? No. Why? Low, high, low, high, low, high, low, high, low, high, low, and markets come up. Even if we did do this here for a bit, what's the trend? It's called U and ends in P. It's called Chart starts in left and ends in bottom and top right. I think that's called an uptrend, isn't it? See what I'm saying here? So we can just remove the emotions of, oh my goodness. All right. And again, that's where a lot of traders who trade the markets, one of the mistakes they're making is they're looking at indicators to help them decide what's going on. And then they go to YouTube land and they start to focus on all that sort of stuff. So that's what we're seeing right now, guys, when it comes to the silver market, and also what we actually see here with the overall gold market here. Now, gold is not in an actual strong uptrend right now on the short-term charts. So this is if you actually look at gold has just been really sideways for the last many months. So there hasn't been any strong trend. Silver has been though. Silver's been in a very strong upward trend overall, and so but gold is still holding here now. All I do say is this: if I bring up this 4-hour chart, I do know the weekly chart though. The weekly chart is in a very strong upward trend. So here's the thing I'm actually looking for when it comes to gold, because there could be some really amazing opportunities when it comes to gold. This is what I'm looking to hear from gold. Gold is going sideways here right now, right? And so I'm actually expecting another big breakout soon on gold. Now, looking at this, what's happening here on gold here, we're having a bit of a drop. This is the telling story here, guys. Hey guys, hear me out here. This is the telling story. This is called the blast off pattern. The blast off pattern works like this. You normally get like a bit of a triangle pattern through here, as you can see, like a bit of a triangle pattern through there. So you normally get that through there. Here's what happens. We normally have the market go up, hold support, hold support, hold support, and it comes up and it has just a little pullback. And then the blast off move happens. And it happens because we have a little pullback we hold, and then away we go. Right? This one here, big pullback, big pullback, big pullback, or big drop, big drop, big drop. Small little correction, and then woof, buyers come in hard. See the buyers came in early there. Why am I saying that? Look at this here. What could be forming right now, and we never know exactly, right? But what could be forming is that through there. If we do hold and we break out and we start to get some of that there and we create a high low here, that's the buyers saying finally after 3.5 months or close to 4 months of going sideways, the buyers are starting to show their strength. So this little drop here in the market could be like that slingshot move. The slingshot move out of gold could this little drop to the downside. People may be worried about it, but that's what the markets do for it. We have a little pullback, and then we go boom, and then we actually start to have that big explosion through there. So that's what may be happening right now. And so when you start to focus things like on the G or D price, this is the one price. This is obviously the market that I trade when it comes to options. The same situation, right? And the same thing through here. That's the 4-hour chart, by the way. Let's go to the daily charts. Right, same situation from here, right? We have a little drop to the downside. What actually happens here? Does the buyer start to come back in here, or do they not? So that's what, guys, I'm trying to see right now. And as you can see, all I'm doing here, look at all this information I'm giving you right now just by looking at just the chart itself. Yes, I've got moving averages on the chart, but you can see how much information I'm giving you right now based on by looking at the market, just based on by looking at the charts itself. There's so much information we can actually get from the charts if we just look at the charts. Right, and again, guys, that's what my 1% group is, where you're with me every single day. The group is just over 10 people, by the way, guys. So I'm very selective of who I'm in that group. If you enjoy this sort of stuff, guys, and you want more hand holding every single day for a few hours as we go through these markets together, then that second link in the description there, guys, you can go apply for the 1% group. And I'll personally be having a chat with you on the phone. I promise you guys, you get more in a 3-month period out of that group than you have in the last 3 years. I promise you. Now let's go look at oil. Oil right now has been in a very big, strong downtrend. Now, the thing about oil is that even though we had this very big, strong rally here, we can actually see oil is still in a very big, strong downtrend, right? We had this high, lower high, lower high, lower high, and a lower high. We're still pushing on the downside here, pushing on the downside, right? And so we're seeing that through there. So there's actually a good chance that oil could be going down through here. Now, we don't know exactly what's going to happen here, But this is what we want to look at here. Right? We want to start to say, okay, what is likely to happen here? So right now, we're not too quite sure, right? And so this is times when you step aside, you're like, I'm not going to do anything with this market until it tells me here. Now, if you're bullish this market here, what you will want to see, if you're bullish on oil, what you'll want to see is you'll want to see this oil market come back down through to here, hold, and then start to create a higher low. If we can do that, now again, the overall trend is still down, but if we could start to create a higher low here, and then we start to break up through there, if we get this right here, over the next couple of months, you know what that's going to be, right? That's going to be the start of a really big breakout there. A real big, astronomical big breakout here. Let me take off the moving average here so I can just show you what that'll look like on the daily charts. This is the daily charts here. Okay? So right now, everything's looking quite weak. It's tried to rally up a few times and it didn't, right? But if it does hold here now and come back up and break up above there, then we're probably likely to see a really big move here. But for now, the actual market itself and on the USO, the oil market has been going down. Now, last thing here, guys, is what I just said there. The USO chart, though, the USO chart for me is an incredible looking chart. Look at this here. And why I say this is an incredible looking chart is because either way, wherever this breaks out, if the USO chart starts to break up, then we're likely to go through an extraordinary quality move. This happens a lot of the times. Whenever we start to see this sideways pattern here for many years, and then we eventually do start to see the breakout, when the breakout does come, we start to go through a really big move. Now, break out to the upside or break down to the downside, I don't care. Now, I'm not in USO right now, but mark my words, if we do hold here and the market starts to do this and then we start to break out to the upside, get ready for a face ripper rally.